You just finished filing your taxes, made a cup of coffee, sat down in your favorite chair, and for the first time in weeks, you finally exhaled because it was done. Then your phone rings and your neighbor Carol says, "Did you claim the new $6,000 deduction, the one for seniors?" And you say, "What deduction?" She tells you the IRS created a brand new deduction just for people over 65, and her family saved over $1,000 from it. You go back to your laptop, pull up your return, look through every line, and it is not there. You filed correctly, you did not make a single mistake, but you left $6,000 on the table and nobody told you. Right now, millions of American seniors are in exactly that situation. They filed, they thought they were done, but they missed a deduction worth up to $6,000 per person, and some missed $12,000. If you are 65 or older, the next few minutes could put real money back in your pocket, so stay right here. Let me tell you about Robert. Robert is 68, retired after 35 years in a machine shop in Ohio, and he and his wife, Barbara, age 66, have filed their own taxes for 30 years. On January 28, 2026, 2 days after tax season opened, Robert sat down, filed everything correctly, reviewed every number twice, clicked submit, and poured himself a glass of sweet tea. 3 weeks later, his son called from Texas and said, "Dad, did you hear about the new $6,000 senior deduction?" Robert had no idea what he was talking about. His son sent a link to the IRS website and Robert read it slowly. Enhanced deduction for seniors, $6,000 per person, $12,000 for married couples, effective 2025 through 2028. He and Barbara both qualified, and together that was $12,000 off their taxable income, which at their tax rate meant over $1,400 in real money gone. He called his tax software company, and they told him the IRS did not publish the final Schedule 1A instructions until February 27th. So when he filed in January, the software did not have the complete form yet. Robert did everything right, but filed 1 month too early, and it cost him $1,400. Now, Robert's story has a good ending because his son told him about Form 1040X, the amended return, and Robert filed it and got his refund. But most seniors do not know that option exists, and today I want to make sure you do. On July 4th, 2025, a new tax law was signed called the One Big Beautiful Bill Act, and inside that law is a brand new benefit for Americans over 65 called the Enhanced Deduction for Seniors. Here is exactly what the IRS says. If you are 65 or older, you may claim an additional $6,000 deduction on your federal tax return per person, and if you are married and both spouses are 65 or older, that is $12,000. Now, this is not $6,000 deposited into your bank account. A deduction lowers your taxable income, which lowers your tax bill. So if you are in the 12% tax bracket, $6,000 saves you $720. And if you are in the 22% bracket, it saves you $1,320, with the average senior expected to pocket approximately $670 more this year from this deduction alone. To qualify, you must be 65 or older by December 31st of the tax year. You must have a valid Social Security number. If married, you must file jointly, and your modified adjusted gross income must be within the limits, which means full $6,000 for single filers under $75,000 and full $12,000 for couples under $150,000. If your income is slightly over the limit, the deduction phases out gradually at 6 cents for every dollar over, so even a single filer at $85,000 still claims $5,400, and the deduction disappears completely above $175,000 for single filers and $250,000 for couples. The detail that surprises almost everyone is that you do not have to itemize to claim this. Most seniors take the standard deduction and they can still claim this $6,000 right on top of it, meaning a qualifying senior couple could shield nearly $50,000 of retirement income from federal tax entirely. To claim it, you need to file Schedule 1A, which the IRS published on March 2nd, 2026. And if you use tax software, it should apply automatically based on your birth date, but search your return for Schedule 1A and confirm the $6,000 or $12,000 appears before you submit. One important misconception to clear up right now is that many seniors believe this $6,000 deduction makes their Social Security tax-free, and it does not. It lowers your taxable income, which may reduce how much of your Social Security is taxed, but Social Security tax rules have not changed, and if your combined income exceeds $25,000 as a single filer or $32,000 as a couple, up to 85% of your Social Security can still be taxed. The $6,000 helps, but it is not a complete exemption, so do not let anyone tell you otherwise. Now, if you filed before February 27th, 2026, there is a real chance your return is missing Schedule 1A because the IRS opened tax season on January 26th but did not publish the final Schedule 1A instructions until February 27th, a full-month gap, and many software providers did not have the finalized form during that window. If you filed in January or early February, pull up your return right now and check for Schedule 1A, and if it is missing, you need to file Form 1040X. The amended return deadline for 2025 is April 15th, 2029, so you have time, but act now, not later. Here are 3 steps to write down right now. Step 1. Check your 2025 return today and look for Schedule 1A, showing $6,000 or $12,000 for couples. And if it is there, you are done. If it is not there, move to Step 2 immediately. Step 2. Go to irs.gov and search Form 1040X, which is the amended U.S. individual income tax return, and file it electronically with Schedule 1A attached so the IRS can recalculate and send your refund. If this feels overwhelming, call the AARP Foundation Tax Aid Program, which is completely free, available at thousands of locations nationwide, and tell them you need help filing a Form 1040X to claim the enhanced deduction for seniors. Step 3. Protect this deduction through 2028, because this runs for 4 tax years, and if you miss 1 year, that money is gone forever. So write a physical note right now and put it with your tax documents that says claim Schedule 1A, $6,000 senior deduction every year through 2028. And if you use a tax preparer, show them this and tell them specifically to include Schedule 1A on your return and confirm it before you sign. One final warning: if your income is near the phase-out threshold, be very careful about IRA withdrawals because taking more than your required minimum distribution could push you over the limit and cost you the entire $6,000, and managing your income carefully just below that threshold could save you over $1,000 every single year for 4 straight years. So talk to your tax preparer before taking any extra withdrawals, because that is your money and it deserves to be protected. The IRS signed this law on July 4th, 2025. Tax season opened January 26th, 2026, and final instructions were not published until February 27th, 2026, a 7-month gap between the law being signed and seniors having a working form to use, which means millions filed before that form existed, and millions missed this deduction not because they were careless, but because the information simply did not reach them in time. Think of one person in your life over 65, a spouse, a parent, a neighbor, a friend, because they may have already filed and already missed this. And sharing this information with them right now could put real money back in their hands, because what belongs to you should never be allowed to slip away.